Good morning, students. How are you all? Hope you all are fine at home. I am also fine, students. Okay, hope you all are that you are learning your daily lessons. Okay, do it. Otherwise, you may find it difficult. Okay, I think very few students are watching the videos. I request everyone, all the students must watch the videos and you should attend that interactive session also. Okay, everyone. So, up to yesterday's, we have learned about the accounting concepts. Okay, 10 accounting concepts. Now we have conventions 4. I think I told you 5 yesterday. 4 conventions also available. Okay, totally 14 that principles. Okay, now that 11 we will write as. Okay, 14 together. So what is the 11th one? Here, convention of consistency. Consistency. What is the meaning of this word consistency? That means permanency, permanent. Okay, permanently we should use the same principles. Okay, if we use one method, now the same method must be followed for different years. Okay, for many years. Only then we can do the comparison of one financial statements with the other year's financial statement can be made possible if we follow that convention of consistency. That means the same principles or the same accounting policies must be followed, okay, from year after year for many years. Okay, and here we can say one example. In the next year you will in the same year we will learn one lesson as depreciation. I have taught you what is depreciation. That means a gradual reduction in the value of fixed asset. Okay, the fixed asset we will reduce one amount as depreciation. Okay, here there are many methods, mainly two methods are followed by different organizations. There, one is straight line method, the other one is written down value method. Okay, written down value method and reducing balance method. Okay, so here if they use the straight line method, they must follow the same method for many years. Okay, or they follow the reducing balance method for this year. For that particular asset, they have to follow the same method till the end of the life of that asset. Okay, so we should not conclude that we may not change these methods. Okay, changes can be made. Changes are possible only uh, under some conditions. Okay, if the law states, Indian law, any act, Companies Act, if they say, so in order to abide by the provisions of the law, we can make changes in the policies. Okay, new policies can be implemented. Or for the accounting standards are issued by the international organization or the Indian authorities. So that to abide by those standards, we can change the method. All of a sudden, the government may say all the business organization or this industrial organizations, they have to follow this straight line method or written down value method. If they say, we can change it. Okay. Or for some time, the business itself will think we should show the true and fair view of the financial position of the business. If we show, if we are following that written down value method, only then it will show the true and fair view of financial position. Then we can change that one method to other method. Okay, so that is called the convention of consistency, that accounting principles and policies must be followed in the same organization for many years continuously. Okay, not changing the policies often. Why? Just for making comparable studies. Okay, in order to compare one accounting statements with the other year's accounting statements, this convention is useful. Okay, and I have told you one example. Okay, that method of depreciation. Then the second one is, 12th one is convention of full disclosure. Full disclosure. Here we have to, that means disclose means, from this word you should understand. Open, show. Disclose means open, isn't it? That means we have to show all the details. Here what we should be shown? The material information. That means all the significant, what are the important information must be shown in the books of accounts, in the accounting statement. Okay, that means all the accounts must be prepared honestly. They may not hide any information. Okay, so all the material information must be shown in the accounting statements, because here you should understand, because who is preparing, the accountant is preparing. Actually the users or maybe the management, and management also we can say they may prepare the accounts. But here the management is different from the owners in many organizations. Now we also own share in some companies, but we do not manage that company. Okay, management is done by someone else and accounts are prepared by somebody else. So they have to show all the information, what are all needed to show in the books of accounts must be shown. All the important information must be shown in the books of accounts. That is called full disclosure. It must be full and it must be fair. Okay, all reasonable information must be shown. Okay, or what are needed, adequate information, what are the information we need, the owners want to know, that information must be shown in the books of accounts. Okay, only then they can assess, who the owners or the users can assess the correct profitability and the true and fair view of the financial position. So the information what is disclosed must be full, fair and adequate. Okay, all the information, what is material, that means here not the material that we use in the production. Okay, material means here that we will learn in the next one also, materiality. So what all the information is needed, what are the information we think that they are important for the users, or what are the information which are significant, okay, or the importance must be shown in the books of accounts. Okay, then 13th one. Now convention of materiality. Here you will understand little more what is material. Okay, materiality means that here the same thing. Okay, importance. Important matters must be shown. Okay, in the accounts, financial statements. What is not important, we do not need to show. For example, that 5 rupees they might have spent to purchase one rubber. Can they write that one separately? No need. That they can write everything together, stationery. Okay, sometimes they will write even stationery, then postage, okay, sending telegram, all these together they will show as office expenses. Okay, or the electrical charges are little more than this stationery. Okay, everything we cannot write as one office expenses, we should show as separate electricity charges. Okay, then the stationery, because that if it is educational institution, we need to have many this stationery items, pen, paper, everything, so we can write here separately. Okay, that is called materiality. In the educational institution, we can show this, even notebooks separate, textbooks is separate, pen, pencil, everything we can write separately. Okay, that is material, that is importance for the educational institution. But if it is for an industrial organization, the stationery will be very less. Okay, so there they can give together as office expenses. Okay, now you have understood what is the meaning of materiality. Okay, so what is maybe for one organization it will be that information may be material. The same thing may be immaterial for another organization. Just one example I will cite for you. Okay, a coconut merchant, he is purchasing the coconut. Okay, and the coconut husk, you know that what when we peel that coconut, that inside that nut only we use, isn't it? We grab that coconut and we take that one. But the husk, you know, we will make it dry and we will use for burning, isn't it? So for the coconut merchant, he doesn't need that one. He will throw that one and he will take that coconut alone and he will sell. Okay, that is a waste for him. But the other person, one who is running a coir factory. Okay, coir factory, you know, that we make the coir from that coconut husk. So for that person, that is the raw material. Okay, that he gives more important. But here this person gives that one less important, because this coconut merchant may sell this husk for very less price, isn't it? That is his byproduct, the second product. His first product is coconut. But there in the coir factory, that is the raw material. So how much they are purchasing, that is very important, that they should show. Okay, that is material. So here you see that as for one person it is immaterial, for the other person, for the coir factory, that is the material information. Okay, so in the same way it depends upon the size of the organization or nature of the information. Okay, this materiality depends upon the size of the organization or the nature, what they use. Okay, nature of the organization. Then sometimes the amount involved, I told you, 5 rupees, no need to show that one. Okay, the amount involved, all depend upon all these factors, this materiality will vary. Okay, for one organization a particular item may be immaterial, but in the same that item may be immaterial for other type of organization. So all the material information must be disclosed. Okay, so here we can say, here what we have, here also we have learned the material information. Okay, everything should be shown, we have learned, but here one exemption. Okay, some very immaterial information may not be shown in the books of accounts. Okay students, now the last one is convention of conservatism. Conservatism, you know, isn't it? Conserve that to protection, isn't it? Conservatism or prudence. Prudence means wise, isn't it? Being wise. Here conservatism means protection. We have to protect. Okay, that means we must be prudent, we must be wise, or we must have the cause. Okay, we should be cautious, we should be very careful. Okay, that is cautious. related to some items while recording some information. Here I will explain why they must be cautious. That means about the future loss and future income. They must not worry about the future income, okay, but they must provide. They have to anticipated loss. Anticipated loss must be, the loss must be anticipated and we have to provide for the same. Okay, because in future we may not suffer a loss in the business. For that purpose, now itself we have to provide something to that just for a safety measure. Okay, so for safety measure, but future income, okay, next year we will get some income, so this year itself we can we may not add. Here only we have studied that the realization concept. Do you remember I have explained about the realization concept? Any income or that must be entered only at the time of realization of the asset. Okay, any increase or decrease in the value of the fixed asset will be entered only at the time of realization. Okay, here are the same thing. Okay, related one here. Okay, this concept is related to this conservatism. That's why if it is keeping on increasing the value of a particular asset, we never write that asset in the market price. Only at the time of selling of the asset only we will consider as the profit. Here we can say one example. I have told you before also. The valuation of closing stock. The asset we have studied, we will write the increase or decrease in the value at the time of realization. That means at the time of selling. Okay, here the closing stock, what is the goods that are not sold. Okay, this also must be shown in amount. So in which amount they will calculate. Okay, they have to calculate first the cost price. Cost means how much we spend to produce. Okay, that cost of production. Okay, that they will calculate, cost of production, and the market price also they will calculate. Okay, for example, 10,000 units, if they say that the cost price is 25,000, then the market price, now if we sell that price, we will get 35,000. So, which value we have to show in the financial statements? Here we should show the less price, 25,000, not the higher price. This one is because of this convention of conservatism or prudence. We should be prudent. We must be wise. All of a sudden, the market price may go fall. Okay, may go down. So we may not value this closing stock at the market price, the higher price. So here one statement is there, closing stock is valued at cost price or market price, whichever is lower. So the lower price is 25,000. So we value the closing stock as 25,000 but not 35,000. This is the future income. Future income is not considered, only the future loss. For this purpose only, we provide something as bad debts. Okay, then sometimes some debtors may not pay some of their debts. So now itself we will reduce, write off. Okay, 1-2% every year we will write off. Sometimes they may not pay. Since some may our customers purchase from us and they may run a business. If they incur loss continuously, they may not be able to pay back our debts. So that must be anticipated, that must be predicted, and we have to write off a certain percentage as bad debts and again 1% as provision for doubtful debts. Here they will not give, here doubtful debts. So for that purpose also 5% must be shown, because why, we should show the sundry debtors little less. We may not receive the full debts fully. Okay, so we have to write, we have to anticipate the loss and we have to provide for that loss. Okay, that is conservatism, convention of conservatism or prudence. I think you might have understood what I have explained, the 4 conventions. Okay, students. So, with this we have completed. One more heading is there, accounting standards. That is deleted portion. Okay, the accounting standards is the deleted portion. Okay, accounting standards, deleted one. I will show you today what I have taught you. Okay, convention of consistency. Okay, convention of consistency. This is one of the question answer. Okay, you have to do. Convention of consistency, then convention of disclosure. Okay, convention of disclosure, full disclosure, then convention of materiality. Okay, then convention of prudence or conservatism. Okay, this now it is little clear. Okay, convention of conservatism, convention of materiality, then convention of full disclosure. Okay, this one. Okay, now it is clear. I will show you the questions also. All the questions. Okay, very short and short answers. Okay, then you can mark it. I have written the page number also. You can mark and you can learn. Okay, students. Hope you might have understood and learn it. Okay, and come on Monday with your doubts. Thank you, students.